Scott Bauer is the CEO of Prosper Trading Academy. He's at the SIBO. So Scott, let me get this straight. You're watching this game last night. The shoe blows out and you start trading Nike. Is that how you're doing business now? What's going on, Scott?
That's what you got to do, right? If you're not trading Bitcoin, you got to be trading Nike when something like that happens, right?
That's event, trading and stuff like that, right? So what's going on?
You know, this is an emotional overreaction, and that's what traders like to look for in the marketplace. You know, yes, there was an incident last night. Everybody saw it. If you didn't see it, you can YouTube it. You can, go online and, Zion Williamson, who's going to be the #1 pick in the NBA draft coming up here, made a move and his shoe blew out. Now, is that fundamentally a reason or technically a reason to sell Nike? Does that mean that Nike moving forward is making poor quality merchandise? Absolutely not. Isolated incident, you're talking about an elite athlete, 270 pounds. This is, in my opinion, nothing fundamental that should harm this company whatsoever. The company is driven towards growth. Their top, their bottom line is amazing, and I love the opportunity on a very small pullback to get into this thing. Now, it was trading lower overnight than it is right now. I'd love to see it get down another 50, 80 cents or so, and then I'm in full board on this thing.
Yeah. So, Scott, this is like an opportunity to get into a company that has been one of the big retail, winners, basically carving out its business model.
Yeah.
Is this just basically like a stock replacement? What's your sort of duration you want to be in this trade?
So this is a very short-term trade, actually. Okay. It goes out to March expiration. And what I'm looking to do, Oliver, is buy two trades, actually. I'm looking to buy the 85, 87.5 call spread going out to regular March expiration, which gives me about 3.5 weeks or so. I can do that for 65 to 70 cents or so, $2.50 wide spread. I love the upside. Now, I'm going to also do what's called, as what traders talk about, as the Texas hedge. And certainly Kevin Hinks knows what I'm talking about with this one. I'm also selling a put spread that expires next week. And I'm doing that to finance the purchase of my call spread. So I'm going to sell next week's expiration 83.82 put spread. I can do that for about 30 to 35 cents. Now, the reason I like that, it's not just, hey, I'm just uber bullish on Nike. But if for some reason the stock continues to go down, I'm stopped out, or my break even on that put spread side of things is about 82.70-ish. I am completely comfortable being long the stock if it gets put to me on that put spread. So I'm selling a put spread, I'm buying a call spread. Yes, it is a very bullish position here. I don't have a lot of capital at risk. My risk is if the stock continues to go down, I get put the stock, which I want to buy it at that level anyway.
Yeah. All right. Love it.
I hope that all makes sense to you.
It does make sense, Scott. It's a great setup into our conversation later about the actual event and the reaction to what it might mean. Mr. Bauer, always a pleasure. Great. We're going to follow up on that. All right. Scott Bauer is the CEO of Prosper Trading Academy, joining us.